Hi everyone, I am C. Surbi Punshi, Index Tax Expert at ClearTax, and today we are going to understand about the key highlights and detailed analysis of Budget 2022. And we also have with us our panelists. So, especially when we just talk about this Budget 2022, it has been a transformative and progressive budget. In terms of GST, the government have proposed to completely revamp the input tax credit availment and utilization mechanism. This is on the basis of experience which they have gained, especially during the last 5 years. And also there was some ambiguity regarding the cryptocurrency, and also they have also clarified like what would be the taxability on that. We are going to understand about all of this in detail. So before that, I will just want to first check if everyone is able to hear us or not. So if you all are able to hear us, just say hi on the chat box. Great. So it seems like everyone is able to hear us. So with this, I would like to first introduce our panelists. So we have with us Yash Arora ji. He's a CFO of Adani Gas. He's an experienced finance professional with 27 years track record of working multiple sectors, manufacturing, investment banking, and infrastructure sector. By qualification, he's a chartered accountant, qualified valuer from C Institute, CPA from Australia, and alumni of IIM Calcutta. Presently, he's working as a CFO in Indian Oil Adani Gas Private Limited. So, with this, we welcome Yashji.
Yeah, thank you. Thanks.
So our next panelist is CA Venugopalji. He's a founder of partner in MS Venu and Vinay Chartered Accountants since 2002. His academic credentials include securing All India 45th rank in CA final. He's also a certified information system auditor. He has also completed various other certificate courses from ICI like DISA course on business valuation, course on international audit, course on fraud detection and forensic accounting. So with this, we welcome CA Venugopalji.
Thank you, Surbi. Hello, everyone.
So our next panelist is Jagdish Baheti ji. He's an experienced chartered accountant and PGDBM finance with experience in manufacturing industry, having SAP knowledge and skilled in budgeting, planning, forecasting, monthly, yearly closing, taxation, treasury, supply chain finance, and project finance. It has been 5 years since he's working with Delphigen as a CFO India and head finance. Prior to this, he was working with Vogel, a German MNC in Pune for around 3 years. So with this, we welcome Jagdish ji.
Thanks, Surbi. Hello, everybody.
Thank you, Jagdish ji. So we have another panelist. He will be joining us within like maybe next 10-15 minutes. So he's Ravi Gupta. He has done his graduation and post-graduation from Shri Ram College of Commerce. Thereafter, he did LLB from Delhi University and MBA Finance from Faculty of Management Studies, Delhi. He has been awarded a PhD degree in International Finance by the Delhi University. So with this, I would like to welcome all of our panelists. And just for a small update, so today, Grish sir also was about to join, but because of due to some critical family emergency, he will not be able to join us today. So we wish him and his family stand to go through this tough time, and we are thankful to Ravi sir to be able to join on his behalf. So now we'll just start our today's session, which is especially related to our budget. Especially we want to understand like what were the important thing in this budget, how this is going to impact the businesses. Also about lot of things, which is especially is something which we want to understand. So maybe first thing I would like to understand from Venugopalji. So sir, because we know that there are a lot of changes which have come up in the budget. We just want to understand about the major changes in the budget which is related to GST.
Okay. So just to start with, if you look at, if someone is watching the budget speech, the changes relating to indirect taxes was just only 5 minutes. And when it was a mention on the GST, it was just a passing comment, not even a minute. Someone would have thought, okay, hardly there are any changes. Of course, with the GST Council and the state and the central GST Acts being there, definitely there are not much changes. Even though there are minor changes that have happened, they are very critical changes. In fact, every business who is managing GST should keenly look for how does it impact them. And one of the biggest change that happened in this budget is the way the input tax credit is being availed. In fact, from the beginning, from the day one of introduction of the GST, there has been some apprehension with the government since the GST being implemented. Some kind of trust factor between the government and SSC is being kind of questioned, the way the matching mechanism they were implementing and everything. But this budget has actually increased that, and the where the trust factor is really questioned, and everything an SSC is doing, it's like I'm watching and I really want you to do correctly. That kind of message is being signaled and sent to the taxpayers. I think as we go through, we look at the other changes that have come. But I would say there were procedural changes that have happened in terms of the timeline, which are more welcoming, because the order of the compliances, generally people finalize their income tax related work first, the statutory audit, then the indirect taxes. So any changes they are on, they would have the time to correct it, so that leeway has been brought in. The second major change is on the input tax credit, and the other procedural changes which has happened, which everyone also have to be careful, is if there is any judgment from the High Court and Supreme Court. Today, the acts have been getting amended retrospectively, and with the wordings putting in the act not containing anything in the earlier judgments or decrees which have been passed, overturning those judgments, bringing those amendments with retrospective effect is something which everyone has to be watchful. Like last year budget, we have seen owing to Calcutta Club case, where the association clubs, they said they would be taxing it from retrospective. Again, from Canon India, where the powers of the officers have been questioned. In this budget, they have made it vivid, saying that, okay, these powers are there, and this has been made retrospective. So one other thing, the signal which we have to take from this budget is certain judgments, even if it is welcome in nature, the government is of a mood, if they feel that the intention of the draftsman was a little different and that was not well communicated from the act, the judicial, when they are interpreting, they would interpret in the principles of the natural justice. The government is overturning those judgments. These are the things I would say people have to be watchful. Businessman has to be watchful from the budget.
Thank you, Vinod sir. With this, because I know that there were a lot of changes, and we'll anyhow going to understand about this all changes in detail. But with this, I would also like to understand Yash's opinion about the budget. How was the budget, and what is your opinion on the same?
See, I look at the GST perspective in two ways. One is the strategic changes, and other is the administrative changes. As far as strategic changes are concerned, I think I mainly two strategic changes. One is on the input tax credit. I think the way this is to be claimed, it is completely rewritten now. And second is retrospective changes. Anything which is contradicted to the spirit of the law, that is something that will remain as the spirit.
Actually, I think I don't know. People are just saying like your voice is breaking in between, so they get some issue from that side.
I think there's an echo. I don't know why it is so. Yeah.
Okay, so seems like there was some connectivity issues from Yashi. So till the time he comes back, maybe we'll just like to understand like other things. Now, because we just talked about the major changes in the budget, I would just like to understand from Jagdish ji, like how these changes are actually going to impact the businesses.
Thanks, Surbi. I think the government wants to have the visibility through their portal that what you are transacting between two parties and have real time visibility so that you cannot have fancy planning and you cannot have disconnections between what you submit to customs, what you submit to vendor side and customer side. Rule 36.4 was amended to completely remove the concept of provisional input tax credit. Now, the taxpayers can only claim input tax credit on invoices that their suppliers upload on the portal. For businesses, there is now the added pressure to reconcile purchase and sales data more frequently and in real time. Further, there is unprecedented dependency on vendors and the need to follow up more often to pressure them in uploading invoices on time. So input tax credit claimed in excess could result in demand notices and penalties, while input tax credit short claimed could hit working capital and profits. Businesses need to really balance the two and take the correct credit. The overall timeline for amendments, issuance of credit notes and debit notes, as well as ITC for a financial year has been increased from 30th September to 30th November of the following year. This has been done in line with the annual return due date of 31st December and to also reduce the burden on companies for 30th September, which is the due date for several other regulations. So this will help companies, to manage it properly. Another thing the government has allowed is the transfer of CGST cash balance from one registration to another within the same PAN and also provide refund forms and mechanism for excess deposit of cash. So the specific forms and regulations shall be notified to seek a refund of the cash deposited over the required amount. This is a very welcome step. This would allow the companies to manage their working capital requirements in case they have cash balances stuck in a particular registration. So the present budget changes has made fair choices to build better business environment, I can say.
Thank you, Jagdish ji, for like explaining about the same. And I think we have like Yashi also back. Hope now there would be no problem from the network side.
Yeah,
Um,
sorry for the issue. Now, is
okay.
it clear now?
Yeah,
Are you
it's
able to hear?
perfectly okay.
Okay, fine. See, as far as the changes which have been brought in, proposed, those are of two kind, strategic as well as the administrative. As far as strategic changes are concerned, one is that's the input tax credit availment and utilization thereof. That's a sweep change. I think it will have a wider, much wider implications in the time to come. I think then when we discuss the pros and cons, maybe as a part of the subsequent part of discussions, we will get into further details. And other is anything which is against the spirit of the law, whether that will not be respected or entertained as far as the law is concerned. I think that is the clear-cut message that the government has given now. And a lot of administrative changes which has happened now, right, that extending the dates, maybe giving a clarifications with the retrospective effect, right, that and a lot of other things are all other my colleagues they have already shared it. I don't want to take much time of that. So I think these are reforms, I will say. These are part of the ongoing reforms. This will bring our systems make more robust in the time to come. I think the changes, only the key implication is the wider implication will be on the input tax credit. That is what I look at it. Every organization has to be very, very careful while working on that. So, yeah, over to you, Survey.
Yeah, thank you, Yashi. And I would say, so Ravi ji has also joined us. So we'll just like to welcome Ravi sir. So he has just joined us. So like we'll just continue with our discussion. So maybe because we just talked about like a GST from like a how this is there is a major changes. So Venugopal ji has actually explained about the same. We also understand about the impact on the businesses. So maybe I would like to, and I could even see this particular thing in the query which people are asking. So, sir, can you just actually elaborate on this 30th November deadline? Like, what exactly this mean and how this is going to impact the businesses? Like, what is a change from the business angle when we talk about this 30th November deadline, which has been mentioned in this budget?
Right. Am I audible?
Yeah, you're audible.
Yeah. So the 30th November. Yeah. So 30th November seems to be a welcoming move because, as I said, the order of the finalization of the income.
Seems some connection problems.
Yeah. Okay. So maybe till the time like Venugopal sir join us back, maybe we like to just understand about because we just talked about a lot of things related to GST. So maybe I would like to understand from Ravi sir, like Ravi sir, because we know that there are some changes in respect of Section 139(8)(a). So would just like to understand from you, like how should the taxpayer understand the changes which is made to Section 139(8)(a)? Ravi sir, you're on mute, so you just have to unmute yourself. At the bottom, there would be one button for mic, so you can just press on that.
This would be a green color.
I think Surbi, you can also do it from your side also. Okay. Or meanwhile, maybe Venugopal may continue. I also have to say something on the more on the indirect taxes, right?
Yeah.
So maybe I will just request Denzel if you can just help Ravi sir. So maybe he will just be able to like unmute. So you can just help. Meanwhile, we'll just continue with the other questions we had. So Venugopal sir, if you can just explain about the 30th November deadline.
Right. So the 30th November, the first and foremost confusion people now have is all this while the wordings used in the law was due date of the returns to be filed of September, which was ideally on 20th October. Now, instead of using the word due date of returns of the September, the lawmakers, the draftsmen have pushed the date blanket to 30th November. Now, wherever the dates are there, like where were the dates? Firstly, to avail input tax credit under 16 subsection 4, it was up to September return. So now it has become 30th November. 30th November means, please note, it is not November return. Any return which is filed on or before 30th November. So I was supposed to avail an input tax credit, let's say of Jan 22. I haven't filed the returns of Jan 22. All the returns of financial year say 22-23 filed up until 30th November of 22. They are eligible for the credit. So that's a kind of now the lookout is the date on which such returns are being filed and not the due date. So where all this have been changed, the change has happened in availment of input tax credit, issuing a credit note. Earlier they have delinked, which is a good thing, delinked of reporting of invoice number. Now any credit note which has been issued for any previous financial year, it has to be reported again on or before 30th November. The reporting of credit note happens in GSTR1 and consequently in 3B2. Again, corrections into GSTR1, section 37 permits you to correct your GSTR1. So those corrections earlier was again up to September return. Now that also has been extended to 30th November. I can correct my 3B input tax credit related adjustments. I can correct my GSTR 1 outward supply related adjustments up until 30th November, and the due date has got nothing to do with any return related due date. The due date is the filing date of 30th November. There are two challenges with this. Challenge number one, this is provided in the act and not in the rules. So any correction, if it has to be done in the act, any correction in the rules can come by way of notification. A correction in the act has to necessarily come through the parliamentary budget change. If for some reasons, if the department wants to make a change, they'll be issuing a removal of difficulty order. So this is point number one, people have to be mindful of. Point number two, people have to be mindful of is the November. All this while we were looking at the due date of returns of such filing. Even now people always have this confusion. Okay, instead of up to September, I can avail in the November return. It is not November return. It is the 30th November. It could be any return, but it should have been filed on or before 30th November. These are the two things people have to be mindful of. So that is on the 30th November due date. Apart from this, the regular dealer, there is one more, the e-commerce operator. The e-commerce operators also are, the scope is getting widened. The effective this Jan, we saw that the restaurants and all kind of the vehicle carriers have been brought under this. So even for them, if they are filing any returns, the regular supply GSTR 1 is there. But the other e-commerce operators who are doing a TCS collection, even for them, the 30th November is the due date for correction. These are all the importance of 30th November.
Thank you, Venugopal sir, for answering this. And I guess there was also one query, especially in relation to this, and I think with the Venugopal sir explanation, this is clarified. So maybe just for Ujjwal, I will just repeat his query. He was just asking how this 30th November is interpreted. Will it be treated as a GST return filing date of November? So that was the question which we got from Ujjwal. And I think Venugopal sir has already clarified. Like, see here, when we are looking into the 30th November, this is not like a written filing date as such. It's more of a, you may say, this is a last date for claiming an ITC. So it could be linked to any return period. Maybe there could always be case that March return period, like March return, when we are filing for the March return, we have not filed till 30th November. Maybe let's say we have filed on 1st December. So even if the return was like March, still you will not be able to claim the ITC because it was filed after that particular date. So this is one important thing which we should understand when we talk about the last date for claiming the ITC. So I think this with this we got like answer also very clearly. Now the next important part, because we just talked about this 30th November. I think Jagdish sir also wants to say something. So Jagdish sir, if you want.
Sir, you are on mute. You got to unmute yourself.
So, as already explained by Venugopal, the overall time limit for amendment, issuance of credit notes and debit notes, as well as ITC for financial year, have been increased from 30th September to November. This has been in line with the annual return due date of 31st December, and also reduce the burden of companies for 30th September, which is the due date for several other regulations. So definitely it will help us to plan properly and to follow all the rules and regulations and do the filing in a timely manner.
I guess Yashar also wants to say something. So he was just about to say something.
Yeah.
So yes, sir.
I just wanted to discuss, I think, in terms of the implications of the input tax credit. I think what the industry will have it, I think now the business will be more with the tax compliant guys, right? Because there is a cost in case we are going into the new vendor or the vendor who is defaulting, which will have a cascading effect. That's a cost to us, which makes now the focus is on the screening of the vendors deeply. I think I think the deeper KYC norms from the vendor registering at the time of registration also. And also, I think what is most critical is the software updation, the ERP updation. That is going to be very, very critical. Maybe in a few days will take to understand. By the time the guidelines will come, for the more details will come, and by the time this is to be ready by the 1st of April, I think that will be a very, very challenging for the industry. And maybe, the IT guys, they may not be understanding the full implications. How do we get into this? How do we have these systems in place? I think that is the biggest challenge the industry is going to face. And more tax compliances, I think it will help us, the government, in terms of the more collection. I think maybe the blockchain technology may provide some solutions to it. I look forward. I think that's the only way, industry can hope, so that with a minimum disturbance, I think they should come out with some solutions, and they do have, because they have provided in many other areas. I think they will be able to provide further on it. I think the key is the updation of the softwares is very, very critical. Yeah, that is it. Just wanted to share. Thanks.
Yeah. Thank you, yes, sir. So, Venugopal, sir, you want to say something?
Yeah. So I would like to add one more point, which is kind of basic, is any amendments which are happening under GST, okay, is not effective from 1st April, because the people always get confused. Okay, this is finance budget. Income tax changes are from 1st April. We have, along with Cgst, we have respect to the SGST Act. We have elections coming up in 3 major states. After that, they will be forming the government and tabling it in their respective. So, firstly, this finance bill has to become Finance Act. So, it has to come into Cgst Act. More, and these are all welcoming changes, it would be approved. Second, it has to be also be incorporated into respective SGST Act. Mere updating SGST CGST Act wouldn't be suffice. Each section which has been amended has to be notified with an effective date from which they would want to bring in. So the questions people are asking about is, can this correction be done for financial year 21-22 or 2021? The answer to it as of now is no. As of now, your old provisions will continue. One has to again wait for the GST Council meeting, adopt this, and again a notification being released. So that is something one also has to be watchful of.
Thank you, Venugopal sir. And I think this was a question from Ramakrishna also. So you have just answered it. So hope Ramakrishna, your question is resolved. So now we just were talking about like especially things, right? So we were just talking about the GST. We talked about 30th November wala deadline. We also talked about the ITC, like how this is going to impact. The another important thing which came into the budget was about cryptocurrency. Right? So we know that this is something which people were eagerly to understand how this taxes are going to be levied on this cryptocurrency. So maybe I would like to understand from Jagdish ji, like what are the provisions which has led down in the budget to regulate the cryptocurrency and how it's going to be taxed?
Thanks, Surbhi. I think the budget provision which stole the show is introduction of taxation on virtual and digital assets. Until budget was presented, we did not have the clarity how the tax on cryptocurrencies or NFDs, and the first time government has officially termed digital assets including crypto under virtual digital assets. So there were three big announcements for crypto and central bank digital currencies in this budget. Number one, there will be tax of 30% at flat rate on profits from cryptocurrencies from 1st April 22, and the profits will not be allowed any other deduction or allocations in profit calculations. So also the capital losses on such transactions will only be allowed to be set off against profits on cryptocurrencies, and it will include loss on trading, losing keys, or loss on account of hacking, etc. This means if I earn profit on crypto and if I incur losses on share trading, then the loss on share trading won't be allowed to be set off against profits from crypto, and the complete profit on crypto will be taxed at 30%. And similarly, vice versa, that is, if I make a capital loss on crypto and profits on share trading, then the loss on crypto won't be allowed to be set off against the share trading profit. Second important thing in the budget for cryptocurrency was the proposal to tax every single transaction with 1% TDS from 1st July 22. I think this will be a great way to track the total amount of transactions on crypto. That is how much money is going into and coming out of crypto. However, such TDS shall only apply if aggregate value of consideration to a resident is more than 50,000 in case payment is specified person, and 10,000 in other cases during the year. And this compliance need to be done by crypto exchanges. That is, they need to deduct 1% of amount of investors and pay it to the government. And the third important announcement is the launch of central bank digital currency. It was announced that we might see digital rupee by RBI using blockchain technology, which will be rolled out in the coming financial year. This will be a welcome step towards cashless society and will reduce the inefficiencies in handling the cash. So, in conclusion, I'll say that provisions does not, however, indicate that government has legalized crypto, or it has to, or it do not indicate that government will not ban the cryptocurrency in future. It has only provided the clarity how to calculate the taxes on crypto. Earlier, the provisions were not clear. But if we look from a different angle, we can also understand that Indian government recognizes that cryptocurrencies and other digital virtual assets are here to stay, and government's focus will not be on banning them, but in regulating them in order to prevent the misuse. That's it from my side, Subhi.
Thank you, Jagdish. Because we just understood about the cryptocurrency, I would also like to understand the same thing from the Venugopal ji. So, if you can also like highlight or maybe tell your opinion about the taxation on the cryptocurrency.
Yeah, so I'll be talking more from the GST perspective. In the budget, it is very vividly said. The word cryptocurrency used doesn't mean it is a currency, and they have clearly said currency means a foreign currency or an Indian currency, and Indian currency is something which is approved by RBI. So when I talk about cryptocurrency, it is I am not using the virtual digital assets, but what we popularly know as Bitcoin. And it is a regulated thing, not traded in India. Much debatable issue which is going on, or which needs clarity, is when these cryptocurrencies are traded or purchased offline, however be the mode, will there be a tax implication? Income tax, it is, if you make a profit, you have a 30% tax, very clear. What about GST implication on it? Is GST liable? GST, we know it's not applicable on currency, but is it currency? Answer is no. Is it a security? Okay, the next extension of it is a security. It could be fit into a definition of security, but by means that it is not allowed for trading in India is a debatable thing. However, government has considered this, and they have given an intention stating that they wouldn't want to tax GST on the gross value of the transaction, but however, they will come up with a means of taxing indirect taxes on it. And they would come up maybe a valuation mechanism, how they have given in Rule 32 and 33 for other types of specific transactions. In my view, they would be taxing even GST on it. On definitely brokerage aspect of it is taxable, but will the whole crypto will be taxed is debatable. There is no clarity. However, government has indicated they don't intend to tax the GST on the crypto value. Unless we have a clarity, we cannot say anything on it.
Thank you, Venugopal sir. So with this, maybe I would like to understand from Ravi ji, like because we know about the cryptos and this is like a kind of talk of the town, and we are just talking about cryptocurrency, and Venugopal sir just talked about the GST angle when it comes to like how this is going to happen in the GST side. So we like to understand from you, like if you can just explain about the major changes which happen in respect of these cryptos. So I think that will be of great help.
Ravi sir, I think you have to unmute yourself.
Ravi sir, you, I think now it's.
And am I audible now?
Yeah, yeah, you are
Things I
audible.
want to add to that. Two things I want to add. One is that we have also amended section 56 to 10 in the Income Tax Act. See, now if I sell cryptocurrency, 115 BBH, as was just pointed out, levies a tax of 30%. But 56 to 10 says that even if I do not sell it, I give it by way of a gift to someone without consideration, even then it will become the income of the recipient. Under 56 to 10, what happens is that if a person receives any sum of money, any immovable property, or movable assets without consideration, it is deemed to be the income of the recipient. The problem here was that we had defined the term assets, and virtual assets like crypto were not finding any place there. So, what the Act has done is they have changed that definition of the term assets in 56 to 10, and they have included virtual digital assets there also. So now the result is that if a person receives any cryptocurrency even without consideration, it will become his income and he shall be liable to pay tax on that. Secondly, we were mentioning about the provisions of the TDS. 269S has been, 194S has been introduced in this budget, which provides for the TDS. Now, TDS is to be deducted at the rate of 1%. It has already been explained who has to deduct it. It is the person who's making the payment, whether it's the exchange or any buyer, they have to deduct the TDS. The issue again which is arising is that no loss of any sort and no expenditure in respect of cryptocurrencies are allowed as a deduction. Now, if I read the section 154BH which has been introduced, it says the amount of income tax calculated from the transfer of such digital asset. One interpretation that is going around is that I must tax the income on each asset separately. So if I have a profit from one transaction of crypto and a loss from another transaction of crypto itself, can these two be offset? According to my understanding of the provision, no. Each transaction will be taxed separately. So wherever you earn an income, you pay 30% tax. If you incur a loss, you have to bear that. This is also brought out by the subclause 2 of 158 BH, which says no setup of loss from transfer of virtual digital asset computed under clause A shall be allowed against income computed under any provisions of the Act. Now, any provisions of the Act would include Section 70 also. Section 70 deals with inter-head adjustment. It says any loss from one source can be adjusted against income from another source within the same head. But here, if I have a loss from one cryptocurrency, that again will not be allowed to be set off against income from another cryptocurrency. Right? Of course, if I have a loss, as was explained, if I have a loss from share trading, I cannot adjust that against crypto. If I have a normal business loss, I cannot offset that against crypto income. So all this crypto income will be taxed at the flat rate of 30%. So these are 2 points I wanted to add.
Thank you, Ravi sir. And I think with this we understand like how tough this is going to be with the people like who are actually dealing with these cryptocurrencies and who have earned a lot of income, but at the same time have incurred the losses. So like they won't be able to set off all of that. So that's going to be a challenge from their perspective.
But
So
I think the people dealing in crypto will be happy paying 30% tax. In fact, they were expecting this.
yeah. Right, like again, so it's like I've seen like people who were saying that we earned like a kind of 60 lakh 70 lakh rupees of an income just because of they were just dealing with the cryptocurrency. But again, the problem comes in when they're like, okay, I also have like in the next year I have incurred a lot of losses. What should I do in that case? Will these losses be set off against that income or not? And now, since when we look into the finance bill, this has been clarified that that is not going to happen. So for the people who have also incurred the losses as well as the income, for them it will be kind of a great challenge that okay, now we have to pay only the excess on the income, and I can't even set off that losses part.
Yeah, and the losses, if you incur in crypto, you cannot even carry them forward.
Yeah. So with this, because we just talked about the crypto part, so we also have with us CA Preeti Khurana ji. She is a director of advocacy and regulation at Clear. So we'd just like to introduce Preeti ji also over here. So
Thank you,
Preeti ji, if
Surbhi.
you
Thank you,
so
Surbhi, so much. And firstly, I'm really missing Girish sir. He's my guru also. So my gratitude to him and also to Ravi sir for joining. Thank you so much, sir, for taking out time. It's always great to hear you. And yes, we are missing Girish sir. Sir, I just wanted to go back to the discussion we had around what constitutes a transfer in the sense of virtual digital assets. Now, in the sense of transfer of a capital asset, I think that has been very clearly defined. It's been, I don't know why this is showing up. Okay, so transfer of capital assets has been very clearly defined in the Act, and it is defined as sale, exchange, relinquishment. Then there is compulsory acquisition, or if you are converting, you are extinguishing your rights, or you are using it to purchase another asset. I mean, there are various manners in which a transfer of capital asset has been defined in the Act, but virtual digital assets are not considered a capital asset from my understanding. And there are so many types of transfers that happen in the sense of cryptocurrencies. There could be a wallet to wallet transfer. P2P lending has picked up. So with all of these scenarios, like, how should we constitute transfer, and do you foresee that this part will be addressed in the finance bill if there is an amendment which is placed?
Well, very rightly pointed out, crypto assets, the virtual assets, have not been classified as capital assets. We are not going to tax this as a capital gain. Otherwise, they would have mentioned what is short term, what is long term. That has not been done here. The intention is to tax it as income from other sources. Therefore, as you rightly pointed out, the definition of the term transfer given under 247, which is particularly for capital assets, will not apply here. Here, I will have to understand the term transfer in the general connotation. So that means transfer will have to be understood in the manner of transfer of the ownership in whatever manner. So it could be sale, it could be exchange, it could be any other form also. As you said, transfer from an account to account, or in any other mode that is specified. In the post-budget memorandum that is being submitted to the government, even the Institute of Chartered Accountants, they have taken this into consideration, and we are seeking clarification on this also. Maybe we will get that in the Finance Act when it is being passed. But as of now, no clarity is there. Transfer, but should be understood in the general connotation.
Right, sir. So thank you so much for pointing that out. Sir, I had one more doubt, and I wish you could clarify it. For some reason, some tax experts are saying that the definition does not include cryptocurrencies. But it is a very wide definition. It can include, reward coins, even cred coins, or some kind of digital wallets could be covered. But some experts are claiming that cryptocurrencies itself are not covered, even though the definition is pretty clear. It says generated through cryptographic means or otherwise. Uh, it's saying, giving that phrase out, but there are certain reports that people are claiming that it does not include cryptocurrencies itself.
Uh, According to my understanding, cryptocurrency will be a form of digital asset. It will be covered here. And although they have used the expression not being Indian currency or foreign currency. So as of now, I do not think we are taking cryptocurrencies as even a foreign currency. Although if I extend it a little bit, I think one country, I don't remember the name, they have recognized this as a currency. So if I go literally by that, then it could be taken as a foreign currency. But I do not think is the intention of the government. and we are not taking this as a currency. So therefore, this should be taken as a virtual digital asset. It should be included. That is my understanding.
Right. Right, sir. I completely agree with you on that. Great, sir. Sir, one more thing. I think I wanted to just ask you, your views on the new tax regime. Now, we have what we have observed at Clear is that a large number of people have actually opted for the old tax regime at the time of filing their tax returns, and they have preferred to opt for ATC and claim all the exemptions and deductions. But day before yesterday, there was an interview with the CBDT chairman and the revenue secretary, and they said that the new regime is the way going forward, because even corporates are moving to the lower tax regime, which does not include exemptions. When they exhaust that period, they have to go for the lower rates and do away with claiming all the exemptions and deductions. So is that the way forward? Is government looking at completely doing away with various exemptions, deductions, and move even individual taxpayers to the new regime? And what are the changes that we could expect in that sense?
Uh, well, ma'am, that is, I think, the philosophy of the government. And that is what has been suggested by various committees over a large number of years. And that is the major step that should be taken towards simplification of the tax laws. See, what is happening is, as the Revenue Secretary also pointed out in one of the discussions we had with him, see, whenever there are discussions on the budget, there are various groups which approach the ministries that please give us this concession, please give us this concession. Automobile industry wants a concession, the electronic industry wants a concession, women wanted a concession, old age people want a concession, insurance companies seek some incentives. So there are pressures from various sort of quarters, and because of that, the government keeps on introducing so many provisions. That complicates the tax law also, erodes the tax base also. The philosophy now that is taking place is that we must do away with all these exemptions, deductions, and lower the tax rate. The effective corporate tax rate is now about 22%, 21 to 22%. And if you see the new provisions that were introduced 2 years back, now for the manufacturing companies, we have a lower rate of 15%, for other companies, 22%, if they do away with the incentives and the deductions. Similarly, the new tax regime that we had for individuals, a small tax benefit is given. But when we made the calculations under the new and the old scheme for salaried tax persons, we found that the new regime is not lucrative enough. The tax, they have to forego the standard deduction, they have to forego the HRA, they have to forego the LTC, and various other benefits. So, for normal salaried class, the new scheme was not attractive enough.
Right.
But I think that if the government makes a clear cut policy and does away with all the exemptions and deductions and reduces the tax rates considerably, everyone will shift to this, and it should become compulsory. So I think that is what we see the future of the tax laws.
Right, sir. So thank you so much for that perspective. I had one more question, sir, around the way the tax rate has been placed under Section 115 for cryptocurrencies. Does that clearly imply that you will not be able to claim minimum exemption limit nor any deductions if, say, there is a certain taxpayer who only has income from cryptocurrencies? Will that person not be able to claim any minimum exemption and also not be able to claim any tax deductions? Sir, are you able to hear us? I think there is some connection issue. Surbi, why don't you
maybe right. So till the time Ravi sir join us back, maybe I would like to understand maybe there are other queries also, like especially when it comes to budget. So one another important question is about the interest wala part, right? So we know that the government says okay, now the interest will be kind of 18%, and they have also clarified on some other points. So maybe I would like to understand from Venugopalji, like what are like your thoughts about the interest part? Like what are the changes which are done in respect of interest calculation in the finance bill?
Yeah. So the first and foremost thing in the earlier GST Council meeting also, they have made it clear that they do not want to charge interest on an input tax credit wrongly availed but not utilized. And the government has been, when I say government, the administrative mechanism has been predominantly whenever a notice is being served, they used to treat it as a fraudulent transaction, and the interest is being collected at the rate of 24%. However, now the welcome move, with the intention of the council, they've aligned the act wherein the interest in case of a wrong availment also is been brought down from 24% to 18%. In case if something which has been utilized, if something which has not been utilized, it is only a liability which is reversed, no interest. The government did not change the rate of interest from 24% to 18% in the act, but however, the notification which was earlier prescribing the rate at which they want to charge from 24%, they have reduced 18%. That means the rate would be 18% as of now, retrospective effect from 1st July 2017, till they enhance the rate. The power to enhance it back to 24% is still written in the Act. Act did not get amended. Act still holds the rate as 24%. But the earlier notification which has been made, that notification has been changed from 24% to 18%. So any rate of interest for the even section 74 where it is wrongly utilized scenarios would also be 18%. However, they have also mentioned if for some reasons the 24% has already been paid, it will not be refunded back. If it has been paid, paid. But any assessments or anything which are pending, everything will be taxed at the rate of 18%.
Thank you, Venugopal sir. And I think this is the question which Ujjwal just asked, and you have already replied it. So now maybe I would also like to understand. So if Jagdish sir, if you can just talk about the implication, the GST, the changes which are there on the budget. So what are the implication in respect of GST on the businesses?
Yeah, as explained by Venugopal sir, I think the government wants to have visibility through their portal, what you are transacting between two parties, and have real time visibility. So you cannot have fancy planning, and you cannot have disconnections between customs, between vendor side and customer side, etc. And now the businesses have to reconcile purchase and sales data in a more frequently and real time. And there is unprecedented dependency on vendors, and the need to follow more often to pressure them into uploading invoices on time. And input tax credit claimed in excess could result in demand notices and penalties, while if they are short claimed, there would be problems with working capital. So we need to really balance the two and take the credit accordingly.
So we are on mute.
Thank you, Jagdishji, and would also like to understand about the opinion on the, especially the impact on the businesses from Yashi. So Yashi, if you can just explain and highlight on like how this is going to impact the businesses.
Yes, already mentioned. Hello?
Hello. Yeah, you're audible.
Okay. See, the impact will be on the vendor selection. I think that is the key to this adhering to this one, because in case we keep on going to the new vendors and the non-compliant, tax compliant vendors, then there will be a cost to the organizations. Now, I think the more and more business will be with the existing vendors that will be, because that's the easiest way to do the businesses. That is to start with. Any new vendor entry will be restricted or will be with caution, so that there is no cascading effect on the businesses. So I think that is, and as a result, there will be inflationary impact in case we are not able to get the credit, because that's simply a direct cost to us. And looking at all these scenarios, but it will help the government in terms of getting the taxes collected better way, more efficient way, and it will help in terms of the capex plan which the government is having it. So I think it's a good move. But on the other side, what has been said is, this is something which the tax GST tax official should be doing it. That has been cast on the, you know taxpayers practically. That's something very very different way of looking at it. Let's say either way, both sides are good. I'll say the both views are valid, but I think it will have a long-term impact, and this is something very, very critical for the organizations. And the most critical, as I already mentioned, is the updation of the ERP. And as clarified by Venugopal, maybe a notification may come, but we are expecting this, since this is a part of the finance bill, maybe April, maybe May. That is the expectation that we have. Okay, we should be all be ready with our ERP infrastructure as far as infrastructure is concerned. But even the availability of the technical guys will be a challenge with our ERP support providers. That's also very, very critical for us to adhere the timelines as and when it comes. Normally, the government has not given a good time. Normally, all the previous changes, they have done it at a very short notice rather than long notices when they started with. So we expect this to be a norm in a few months itself. Thank you.
Thank you, Yashi. And I think we actually understand about lot of things. So when it comes to budget, so if I just brief about lot of things which we discussed in today's session was, one important part was about the cryptocurrency. So we know now the government have brought up this cryptocurrency under the taxation thing, where they have to pay the income tax. And when it comes to GST application on the cryptocurrency, it is still unclear. I would say it's more of a debatable thing. So maybe many people will have an opinion that their GST needs to be levied because it's also kind of an asset. So it will come under definition of goods and you have to pay GST. But again, there could be a different opinion on the same. Then other part we also understood about this relevant of 30th November deadline, because people will just get confused with how this is going to be relevant. Is it like about ITC claiming or amendments or additions? So here also now we are very clear about, after obviously we have to also wait for the notification. It's not like if this is in the finance bill then everything is there. So we have to wait for that, but we know that now the ITC you can claim a maximum by 30th November of the next year. And also if you want to make any changes, any amendments in your GST1, it can also be done only till 30th November. And also there were other related changes in respect of ITC. So they have also made some changes in section 16, subsection 2, where they talked about that it is very important for a vendor to be a compliant. So if the vendor is not making the payment in their GST 3B, so they may also come up and disallow your ITC. So you may have to reverse the ITC. So that are some of that conditions. So they have mentioned some conditions there also. So that would be a kind of a very strict regulation which is going to come on the GST. Other than that, as Yashi also mentioned, that how this is going to impact the businesses. So we have to make sure like what are the vendors. So we have to regulate on the vendors also. We have to make sure from whom we are actually buying stuff. So are they actually compliant or not? So that becomes a necessity now if you want to really run the business and don't want to incur the losses, especially when it comes to a GST component. And then we also talked about interest part. So this was the main thing. But now I would just like to, I think Ravi sir is also there and Preeti ji is also there. So Preeti ji, if you can just take this forward.
Thank you so much, Ravi. Ravi sir, thank you for joining back in. I just wanted to also check with you. The way this new section has been placed of taxing crypto income under the 115 series, uh, is it, should we say that no exemption limit will be applicable for those who let's say,
We're
only
not
have,
able to hear you, Pritiji.
am I not audible?
It's fine for me.
Okay.
It's fine for me also. I can hear you.
Okay. Sir, I'll just repeat it again. So the way crypto taxation has been placed under Section 115. What about exemption limit and claiming ATC and all? Like in the past, we have seen if there is people have income from say gambling or lottery income, they are not allowed to claim exemption limit even against these incomes. And even there have been certain situations where ATC has been disallowed. So is that what we foresee happening with crypto income as well? Sir? Any views on that?
Well, yes, I think so. And the way 115 BBH has been drafted, the way it has been placed, I do not think any exemption, any deduction will be allowed against that income.
Right, sir.
See, like in case of capital gains on shares, wherever they wanted to give an exemption. For
Right,
example, I have long-term capital gain on shares which is being taxed at 10%, or short-term capital on shares which is being taxed at 15%. There we
right.
have a specific proviso which says
Yes,
that if a person has income which is below 2,50,000, he can shift his capital gain to that normal income to claim the full exemption limit.
right, sir.
So wherever the intention was to give that benefit, they have provided for that. There is no
Yes,
such provision under 115 BBH. So I do not think you'll be able to claim the basic exemption limit. So
right,
if
sir.
a person earns only crypto income, and let us say his total income is 5 lakh rupees in a year, he will have to pay 30% on 5 lakhs.
Right, sir.
So no basic exemption also should be available to him. Of course, deduction is prohibited specifically. So ATC and all are not eligible at all.
Right, sir. I got your point, sir. Thanks for clarifying, sir. Surbi, you want to take over?
Yeah, so I think we got like a lot of thing over here, and we discussed a lot of things which came in the finance bill. And with this, I would actually like to thank everyone so for joining here and explaining about the budget, because there were a lot of confusion which was there in the market. So even after reading the finance bill, there were a lot of questions which was coming in our mind, like is it this is how this is going to happen, or like how this is actually going to impact our businesses and all. And our panelists have actually explained this in really detail, and I would like to thank everyone. So thank you, Jagdish ji,
Thank
thank
you,
you,
Surbi.
Venugopal ji.
Surbi, sir, thank you very much. And please
Thank
pass my
you.
regards to Girish sir also.
Definitely, definitely.
Thank you. Thank you,
Thank
Surbi.
you.
Thanks, Priti. Thank you.
Thank you.
Thanks all. Thank you.
Thank you.
Thank you, everyone.
Thank you, everyone.
Thank you, everyone.